I don't have a crystal ball, but there are 5 key indicators I watch closely because they often signal how the housing market is shaping up for the year ahead. I'm Jefferson Akin, and this is Market Pulse Weekly. As we get close to the end of the year, you may be seeing a lot of headlines and predictions about what's coming next. It can feel hard to know what actually matters. So today, I want to share the 5 indicators I'll be watching most closely in early 2026. Not to forecast the future, but to help understand how the start of the year often sets the tone for what follows. Number 1, active listings. Inventory climbed steadily throughout 2025. As we covered in last week's market recap, we're now at the highest inventory level we've seen since 2014. This does not mean housing prices are weakening. What it does mean is that buyers have more choice, and sellers will want to be thoughtful about pricing, condition, and presentation. Number 2, new listing flow. Every January, we see a predictable rise in new listings. The pattern itself is consistent. What I'm watching is the size and speed of that early year return. A slower rebound keeps conditions tighter. A faster rebound creates more competition and more options for buyers. Number 3, buyer showing activity. Showings always ease during the holidays, and that's exactly what we're seeing now. The decline has been seasonal and gradual, not abrupt. And activity is still running slightly ahead of last year's pace. I watch showings closely because they often shift before pricing or accepted offers do. When buyers start touring more in January, offers usually follow soon after. Number 4, days on market. Days on market almost always stretch in December. Fewer tours naturally slow transaction speed. What matters is how quickly that changes in January. If days on market tighten, buyer urgency is returning. If they continue to stretch, buyers may be more selective, not necessarily less willing to pay, but more deliberate. Number 5, rate stability. Most people focus on the rate itself, but steadiness matters just as much. Lately, rates have been moving within a fairly narrow range. No sharp spikes, no sudden drops. That kind of stability makes planning easier, whether you're buying or selling. When you look at these indicators together, none of them tells the whole story on its own, but how they behave early in the year often shapes how the rest of the market feels, from buyer confidence to seller expectations. If you're considering a move in 2026, watching these trends can bring clarity well before the headlines catch up. Full details are in this week's Market Pulse Weekly blog. A link is in the description below. Thank you for watching. See you next week.